Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to today's Tuesday, the 13th of February, Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. We're going to go through usual regular run through in here today. Look at the calendar, what we've had, what we've got coming up, what are the major fundamental macroeconomic central bank geopolitical events that are impacting financial markets right here, right now. It will be a short webinar. All eyes on CPI data, which is up in just over 58 minutes. So that's the eyes on the prize. And that's what we're really looking for today as the dictating really the tone probably for today, maybe this week, and maybe beyond that as well, because I think it's a super important piece of data to maybe give the Fed the impetus to potentially, the market now very much expecting rates not to be cut in March, as we've been watching on the Fed Watch tool here. So now only 85% chance of us unchanged, 84.5% chance of us unchanged at the March meeting. So this could reopen the door back to that. And if this gives any kind of impetus to that, then for that reason, I think, apart from a really big number in here, I think, it could easily spur the market to go even higher. I know we've been going up anyway. We have dipped lower over the last 12 to 24 hours. However, I do think this could really be an impetus because I think worst case scenario on the data. So if we go and focus in on the data, we're expecting 0.3 and 0.7 on the core numbers and 0.2 and 2.9 on the headline numbers. Now, if they're in line or slightly above, the market is recently has taken that as okay, right? And we're not expecting the Fed anyway to cut rates in March, right? You can see that by the CME tool. We're backed right away from that. So the market's not expecting a rate cut in March. They are expecting a rate cut in May and June, and the Fed are kind of going to deliver on that unless the numbers were particularly high. So now we've got, like, for the May cut now, we have got only a 40% chance of not cutting in May, 60% chance of us cutting in May. And now if we go even further, we've only got a 7.8% chance that we haven't cut by June. So the market's kind of backed off even a little bit in here. There's a 40% chance we might not get a rate cut even in May. So the market's backed right off, on what it was anticipating. It was very forcefully, only a month ago, anticipating a March cut and then a May cut as well. Now we're like, we may not even get a cut in May. So the market is backed right off. So what it says to me is in here is that the risk here is as long as this number is in line or even if it's slightly above, I don't think the market's going to be too perturbed by that. When I say the market, I'm talking about the index futures in here that most of you guys are trading. But the threat is if this number's better than expected, all of a sudden what we're going to see is this is going to shoot up, right? The anticipation for a May cut, and this is going to drop right off from 40%, and the March this may drop and this may shoot back up again. Remember, this was as high as 78% at one point for a rate cut in at the March meeting. So we could easily see a shift back into that, and then that would obviously allow stocks to fly to the upside. So for me, unless the number, and even if the number is higher than expected and we get a dip, so if these numbers are bigger than expected, they're more inflationary than expected, hotter than anticipated, I still don't think it's the end of the world. We're looking for the year-on-year on the core to drop from 3.9 to 3.7, and the headline number from 3.4 to 2.9. Even if it's somewhere in between these numbers, I think you might see a dip if it drops down, to like 3% on the headline or 3.1. It's still better than it was previously, right? So I think what we might see is the worst case scenario for me. I'm bullish anyway, right? I did 2 interviews yesterday. If you get a chance, go check out the interviews. I think they've been posted. I think both of them are posted in the Discord server. We'll try to get them up in the forums as well. For those of you who don't use the Discord, we'll pop them up in the forums. But there's certain, and I think we've shared them on social media. If not, they'll be up on social media today. So those are going to be out there. Take a look. I'm super bullish, but that's a longer run view, that I was asked to give. But even so, I'm still bullish going into the day. I think if you get a dip, you buy it. And if it goes up, you just go with it, right? So I think there is real upside from this data today. Just as a quick nod to this, we did have some UK and European data of note in here this morning. German ZEW sentiment and the European ZEW, you can see mixed in here. The German number slightly worse than expected in here, and the European data slightly better than expected. On the UK data today, average earnings actually a little hotter, so that's kind of a slight negative for the UK. But the claimant count in here was positive in here, and the unemployment rate better than expected. So unemployment is doing well. So potentially avoiding recession, but we don't like to see the average earnings higher than expected, because obviously we're looking for average earnings to start to cool and inflation to start to cool. So that's a little bit of a disappointment, I guess, for the UK, but it was still way down from previous, which was 6.7. So a slightly mixed bag on both on all of the European data, UK and European data that we're seeing this morning, but all eyes on this CPI data. So moving through the articles, major news from the major news wise, Bloomberg 5 things to start your day, inflation day, as I said in here. So we're watching this. So we're looking for inflation to continue to be curbed and to slow down. Everyone's going all in on tech allocation of the sector. So I've got an article on this. Bank of America's fund manager survey sees, a crowded trade, the so-called of owning the Magnificent Seven in here. So hunger for AI stocks as well. Commercial property loans coming due. So this has been a concern. We've talked about commercial property and the regional banks in the US. It hasn't really had an impact, a contagion impact in here. So no real bigger picture threat in here at the moment, but it's something we've been talking about and we're going to keep our eye on. That's the worth they were the international industry to describe. Oh my goodness, I don't know what. Comfortable. I don't know. This is about oil. I haven't actually looked at this one yet. And obviously the data in here today, all eyes on the CPI. So US stock futures are down yesterday and dipped yesterday and back lower in here this morning. CPI may below 3% may not move the dial as much on the pivot. Okay, so and the Bank of America survey says that investors are all in. We already know that. US CPI data, so services is a key driver of disinflation. European shares dipping as well as the US futures on the overnight. Nasdaq slips from its all-time high and Dow is up modestly ahead of the inflation. There's the Bank of America survey that the investors are all in on this rally, so maybe it's getting a little stretched. Bullish investors drop recession calls for first time again in here. Similarly, bullish outlook, again focusing on that Bank of America fund manager survey, and we've already run through in here the Fed tool. Let's take a nod to the overnights. So it will be a short webinar in here today. In here, Nikkei was actually up strong, just under 3% today. Remember, even though Hang Seng was down, Chinese markets closed for the Lunar New Year, and also Korean markets. European markets edging lower. The FTSE with the US futures. FTSE down 0.25% in here this morning, the UK market. German DAX down 0.5%, and the French CAC about 1/3% in here today. And what was this one? This is the US stocks on the overnight. So if we when this loads back up, you can see we're down. The S&P 4/10, Dow Jones little change, actually about 1/10 lower. Nasdaq significantly down 0.75%, but on the back of a really strong rally. This is the one that I'm a little bit noting this. Just watching out if US 10-year yields break. They've been very hesitant to take out this 4.20% level. Above 4.20% would be a bit of a concern. That could see stocks go lower. So maybe keeping an eye on this as well, and the reaction to the CPI data from the bond market. 4.2% and above on US yields would be likely seen as a catalyst for stocks to go lower. Higher yields, obviously negative, particularly for growth stocks. But at the moment in here, there's the bond markets. They are nudging lower and sitting on some notable supports on the prices, on the futures as well. But we're hanging on to, despite the dip lower we had in here on the overnights, hanging on to a bullish view in here as the market has dipped lower yesterday and again on the overnights in here. And a quick look at the charts. We have in here on the Nasdaq taking out that impulse low from 2 days ago. So we made a new high and then set back yesterday. We're down through that impulse low. But if we zoom into the 30-minute chart, you see, I think this important low in here, and we're just above that. So 17,790, keeping an eye on that. Going back to in here, 17,790, 17,773 and a half as well. So 17,790 and 1773.5 important levels on the downside for the Nasdaq. Let's take a look at the S&P in here on the daily first of all. So you can see we're not quite below the impulse low in here, and this little swing low in here from the end of last week. And if we zoom into the 30-minute chart, we do have that candlestick from yesterday, though, shooting star candlestick, which is a negative and obviously down on the overnights. But I think we need to hold above the support in here, which we're just holding at the moment. We've got 5013, 5013, and 5003. And if we go take a look at the on the numbers in here as well, 49.97 and 3/4 just below there. So 5013, 5003, and then 49.97 and 3/4, the key levels on the downside. Other than that, I still think, I think if we dip to those kind of levels, there are buy opportunities going into today. So still wanting to play this from the long side. If we start to take out more significant levels, the primary supports, the first supports here and here, if we start to take these out though today, then maybe you're looking for a more significant correction to the downside. But for the moment, and here staying bullish into the CPI data. So helmets and goggles. Now, do remember, I'm probably preaching to the converted. You guys know this who come onto the webinars. No trading 2 minutes before or after the data. Okay, so depending on where you are on the planet, obviously, it's going to be a different time for you. But it's coming up in now 50 minutes time, right? So whatever it is, 50 or not 50 minutes time, 48 minutes. What time is still down? 49 minutes time from now. Remember, 2 minutes before that and 2 minutes after that. Yeah, so 28 minutes past the hour, 32 minutes past the hour. Not only no working order, no actual open positions, but no orders working in the order book either. For just 4 minutes, you've got to sit on your hands and just wait and see what happens. Okay. All right, guys, I'm going to wrap it up there. Tomorrow we'll be back with another webinar for the Wednesday webinar, looking at what CPI has brought us. Until then, helmets and goggles at the ready. Have a great trading day and take care. Stay safe. Bye.